Director here at Century 21 Newcastle, back with you for our finance update for April. Morning, Nick. Nick Ball from Innovate Finance. I should introduce him, shouldn't I? Joins us, as always, our referral partner, our broker that works within our business for our clients, for our team. What's happening, Nick?
A lot. It hasn't, we keep saying that there's going to be a shift in the market, there's going to be a shift in activity, but we're just not seeing it.
No, and I think the budget's going to definitely help that along a little bit, especially in that middle market.
Yeah, absolutely. I think we didn't have a lot of idea about what the budget was going to look like, and now we've had a chance to see, obviously, the Liberal government's proposed budget. We've heard a lot about the Labor's proposed budget as well, and both of those budgets include a lot for first home buyers, and particularly around the first home loan deposit scheme, which has been in place for a couple of years now, which really assists first home buyers getting into that middle market.
Yep, because there is a purchase limit within what they can use that for, isn't it?
Yeah, absolutely, and it does vary on state and region, but I guess as an FYI for Newcastle, it's up to 800.
Yep.
For regional, so say Maitland, Singleton, it's up to 600. So it is, it's in those sectors where we always have a lot of competition.
Yes.
This is just enhancing it. And I guess, to explain what the proposed changes are, because they're not necessarily changing the structure of the scheme, they're actually just increasing the places.
Yes.
So historically, we've only had 10,000 spots released for established homes every 12 months. The talk is now that it's triple, if not more, spaces.
Wow. So that increased number of places is also going to see a lot of increased appetite within that market, which in turn, there wasn't a lot in the budget for investors, but it's actually going to put pressure on investors looking to get into the market because of that increased competition.
Yeah, absolutely. I think what we saw in 2020, first half of 2021, is that we saw investors
slowly creeping back,
and the first home buyers weren't as competitive with them in that period of time. Whereas I think now if there's that many first home buyers, I think it's important to note that historically the last couple of years, when those places for the prior schemes have come out, they've been gone by mid-September.
Yes.
So you've only had a short window of those
opportunities
buyers being
to get in and use that.
Exactly. So now it looks like if they've got that many places, those buyers will be around all year round. So it's going to change the landscape for everyone. Obviously great for first home buyers.
Yeah, and look, we all want to see everyone get into their first home.
Yep.
So that's really exciting for first home buyers. But we're here to talk about how does it affect you as a landlord. So as a landlord, it's going to be increased competition to get into the market.
Yeah, absolutely. And the other thing I think is that it doesn't help our current rental squeeze, because a lot of first home buyers purchase investment properties that are being sold and convert them from rentals.
Investment to owner occupy, which does push
more pressure on rental availability, and then pushes rental prices up. So it's an interesting dynamic. I don't think.
So is there any wins for landlords? Not in the first instant, but yes, I think it'll push rent prices up. So that'll be your win to take out of it.
And valuations.
Yeah, and vals.
So there is a win. I think asset prices in that zone though will continue to grow.
Right.
I think if we do see a softening, it probably won't be in that segment, just because that's where all the support is.
Yeah, definitely. Interest rates.
Ooh, that's that one
Let's
hurts.
throw the big ones at you.
It's honestly, it's just a constantly moving area at the moment. Fixed rates, I think with the majors, have been going up every week.
Wow.
For the last 4 weeks by 0.3%. So 2 and 3 year fixed rates are now mid-3, high-3.
Wow.
And
Variables?
going lower or at their lowest. We've got variable rates for owner occupiers in 2%.
To explain that to our landlords,
Yeah.
why is that? Why such a difference? Why one's going and one's dropping?
Basically, in reality, it's cost of funds. So it's the same as if, for the same reason that house price to build a house has gone up so much,
Yep.
is because the cost of getting the materials and actually doing all that has gone up significantly. Same with interest rates. Fixed rates are more hedged towards global markets and the bank's actually trading debt. So at the moment, obviously, the global economy is having issues with inflation. Global interest rates have gone through the roof. So fixed rates, therefore, have gone.
Yep.
Whereas variable rates are linked to local funding, so from the Reserve Bank, and they haven't moved the cash rate yet, primarily probably because we're in an election year. But once that moves, that's when variable rates will start to move.
Okay.
So yeah, it's a bit of a challenge because people think, well, fixed rates are here, so doesn't that mean variable rates will be there in that point in time? Not necessarily. It's the banks are trying to make an educated assessment on where those rates should be and where they can price them so they still make money.
Perfect. I love that explanation. So, as a landlord, where do you go from here?
Where we go from here is a great point, particularly for landlords. I think obviously the last 10, 20 years, if you've been invested in property, it's been amazing.
Yeah, it's been a great income, not so much an income earner, but a great asset with good capital growth.
And I think the thing that I'm seeing a lot at the moment is people being nervous about property because of potential volatility or whatever else. But I always bring people back to that. Okay, look at the last 20 years. We've seen GFC, we've seen COVID, we've seen wars, we've seen everything.
Yep.
And property has still
been.
Yeah. So over the even the last 50 years. It's kind of the
safest.
In Australia,
it's bricks and mortar.
What else could be in reality? Like, I know we can't say it is the safest, but in reality, we're a growing country. We have a lack of property for people to live in. I don't think over the next 10 or 20 years there is any potential for there to be a great risk.
Yes.
Obviously, the next couple of years are going to be very interesting. We've come out of the back of
a really high cycle,
and interest rates, global economy, all that sort of stuff has been quite an experience to go through. But we will flatten back out. Interest rates will find a new happy medium. The world will return to normal. And I think property over the long term is still going to be a good bet.
Definitely. That's my thought too. And obviously, that's why we're in this business. So that's our April update for you on the finance market. A little breakdown of what's happening in the budget and how that affects you as a landlord. If you've got any questions in relation to your property, if you haven't refinanced, if you haven't checked your interest rate lately, it's all things you need to do to be that studious investor and make the most out of your property. I'm Casey Healy, Director here at Century 21. Nick Ball from Innovate Finance, thanks for joining us.
Thanks, Casey.
We'll talk next month. Bye.